What is up, everybody? Welcome back to another episode of Bitcoin and Markets. Happy Monday. Hope you had a good weekend. We're hitting the ground running here on Monday with the Bitcoin Fundamentals Report. Let me just share my screen. Bitcoinandmarkets.com. That's where you go for all of my content. And I'm going to do this one. I think that'll make it a little bigger. This is issue number 300. And what I do here is these are weekly free reports. If you guys are new to my content, weekly free reports that go out. They cover all this different sections of Bitcoin and like the headlines, Bitcoin headlines, macro headlines, price analysis, mining, and layer 2 if there's layer 2 news. And then I go through it here on the live stream. So I hope you guys join me, subscribe to the free level. But being that this is number 300, I do have a promotion here. So celebrating 300 reports, you can get a free month when you become a member. So a $5 member, your first month is free. And also professional tier, I will give you here a free month to join the professional tier and join the community. Check out the Telegram, t.me/Bitcoin and Markets. Also, I am live streaming on YouTube, Rumble, Twitter, and Telegram. Put your comments and I will answer your questions or whatever we get into. I love tangents, so whatever you guys got going on, throw them down there in the comment section and we will dig into it. Okay, let's jump into the fundamentals report number 300. Here you can see all these different navigations. So if you just worried about price analysis, you can jump to that. If you just want to see kind of what's going on macro or layer 2, whatever, you can jump to those sections. Okay, so snapshot of Bitcoin. We are in a dip recovery right now. After last week's scary Monday dip that we did call here on the live stream, that was the bottom was in. We will get to that in the price section down below. But overall, like the rest of last week after Monday, Tuesday really was kind of an adrenaline dump because Friday, Monday, they were very high adrenaline periods and the market had an adrenaline dump and kind of consolidated here a little bit. And then as we go throughout this week, we have some uncertainty in the market. That's kind of the narrative I want to build this week is there's a few vectors of uncertainty. And once we move past those, which hopefully this week we can move past some of those, then we will see what happens to price. Okay, media sentiment for Bitcoin is positive. Network traffic, very low. We'll take a look at the mempool and all of that. Mining industry is stable. Weekly price at the time of writing is $59,191. We'll take a look at a live chart later. That is $6,000 or 11% up on the week from issue to issue. Market cap 1.169 trillion. Did not break below that 1 trillion mark, so that was a nice floor for the Bitcoin price. Satoshis per dollar 16.89. One Finny is $5.92. Mining sector, previous difficulty adjustment was a monster 10.5%. The next estimated is in about 2 days, and it will be 3.8% as of right now. Mempool, 125. It didn't go down at all this week. Last week was actually 124, but the network continues to chew through the higher fee transactions. Really, all that's left, you can see this is the fee for the next block is 3 sats per virtual byte. Really, all that's left is these 3s, 1s, and 2s. Okay, so this is a very low mempool full of very, very cheap transactions, 25 cents for a fee. That is insane if you think about moving $10,000 for 25 cents. Crazy. Okay, Lightning Network ticked back above 5,000 for the BTC capacity, 5,005, so 0.5% higher, but channels ticked down again, 49,420. That's 0.2% down. Okay, let's roll into some headlines. So, like I said, there was a lot of adrenaline dumping last week, so there wasn't a ton of news from the second half of the week. So a lot of this stuff is kind of cutting right now or breaking today, but let's go through it. So Marathon to raise 250 million. This was breaking this morning to buy more BTC. You can see that in the headline. In what is certainly a testament to the Bitcoin's health, Bitcoin miner Marathon Digital has announced a plan to raise 250 million to purchase more BTC. Instead, the firm took to X. Indeed, the firm took to X to unveil the plan. Specifically, it revealed a proposed private offering of convertible senior notes. In a press release, the firm stated that net proceeds from the sales of the notes will be used to acquire Bitcoin. Marathon Digital had increased its BTC stash notably last month. Over the course of July, the company added more than 124 million worth of Bitcoin. Okay, this is interesting. Some of the questions that are arising from this is, why aren't they buying more machines? Why is the miner getting involved with buying Bitcoin? Right now, they're with the price suppressed, there is a somewhat of a shift in the incentives. So miners leveraging debt to buy Bitcoin can actually push up the revenue of their mining side of the house. And sometimes that opportunity won't be there, at the tops in the markets. This opportunity is only near the bottom. So I take this as a big time bottom signal from the largest public Bitcoin miner in the world, that they are signaling that this is a bottom and they're buying here instead of, mining. They'd rather have the Bitcoin right now and ride it up in the bull market. Okay, Donald Trump Jr. is launching a crypto platform to take on the banks. So speculation swirled after Eric Trump tweeted about a venture coming in crypto/DeFi. You can see here, I have fallen in love with crypto/DeFi. Stay tuned for a big announcement. I mean, crypto/DeFi. That's just crazy, man. Crazy that they, initially, let me just get into what I wrote here. Initially, many suspected it would involve a shitcoin project. I mean, that's obvious when you talk about DeFi. The only DeFi is Bitcoin. Bitcoin is the only truly decentralized financial instrument. Everything else is a shade of centralization. How centralized is it? How scammy is it? You can have things that are more decentralized, less centralized and less scammy, but they're still centralized in a scam. Bitcoin is the only true DeFi. Okay, while others, including myself, lean towards a stable coin, I was thinking like, okay, they see Tether making 5 billion a quarter or whatever they're making, and they're, man, we got to have a piece of that. So I was kind of leaning towards this type of stable coin. However, recent clarification from Trump Jr. indicates they are building a, quote, crypto platform, end quote, though its exact nature remains unclear. I mean, it could be anything. I don't know. They said they're in the early stages, so they probably don't even know, obviously. If they're saying they like DeFi and crypto, they don't know very much. So as they learn more, they'll come to realize that this is silly. Okay. They should just buy Bitcoin, you idiots. Buy Bitcoin. Years ago, back when I was on the World Crypto Net as a guest, and Tone Vays was on there often, we both were saying, when will these VCs get it that it's best to just buy Bitcoin? Why invest 100 million in some stupid scammy project that you don't know if it's going to succeed when you can just buy Bitcoin? I mean, yes, it's their business model to take huge risks and stuff like that, but you're better off just buying Bitcoin. And these guys, after they learn a little bit and stop talking about crypto and DeFi, start talking about Bitcoin, then they will realize that, they should just buy the Bitcoin. During a Q&A session on subscription-based platform Locals on August 8th, Donald Trump Jr., the eldest son of presidential candidate and former President Donald Trump, said he wasn't launching a meme coin, but working on a crypto platform to take on the banks. Okay, great. They're in this debanking kind of phase. Unbanked. That was Bitcoin circa 2015, definitely 2014, but it was, I would say 2014 through 2016, it was all about this banking the unbanked. That has gone by the wayside because I think people have realized, as I have, that it doesn't matter if somebody doesn't have two nickels to rub together. That's why they don't have a bank account. So if you bank 1 billion people that each have zero net worth, it doesn't matter. You have to get people that have billions in net worth to buy into this and move the needle forward. Just like how all luxury goods are adopted. All luxury goods first are luxury for the wealthy. Then you get economies of scale. You get maybe some tweaks in the production process, and they become cheaper and cheaper and cheaper until they then become for everyone. This is the same way with Bitcoin. They will get adopted by the wealthy first, and it will move down. That's just how it's going to be. So they're still in this phase of banking the unbanked, which is not really a workable business model. You can't bank the unbanked and think it's going to be a profitable business model because they don't have any money. Okay. Moving on to the next headline. Putin signs law legalizing cryptocurrency mining in Russia. And we went over this a lot on Friday, so you guys can go check out my live stream for that. It's just obvious. So Putin has legalized Bitcoin mining. The Russians aren't dumb. They have an advantage in energy, and the world is moving toward Bitcoin. Why not? Okay, next story. Bitcoin headline, a Bitcoin-related headline, I guess this one is. Ethereum ETF flows continue to be negative. So let's take a look at this. Over here on the right-hand side, you can see Friday, -15, Thursday, -3, and Wednesday, -23. So they had 3 negative days to end the week. Last week, going back above -400 million. And so they have an average flow of -$31 million per day. That's their average flow, -$31 million per day. Bitcoin has an average flow. First off, Bitcoin was never negative for total. And it has an average of 118 million per day. And we're approaching 20 billion in total inflows. So at the beginning of all this stuff with the Bitcoin ETFs, people were speculating, all sorts of people were speculating, like Bloomberg. You had, what was it? Is it called Genesis Capital? I can't remember now. Galaxy Capital. And they were all estimating what the flows were going to be. And some of them were very conservative at like 10 billion. The kind of average was 20 billion. And so I calculated that out and I said, okay, if we reach 20 billion, that would have to be $40 million per day because of how many trading days there are from January 11th to the end of the year. You would have to have $40 million per day coming in. And look, we're averaging 120 million. So these flows for the total year are going to be insane. And Ethereum is negative. All right, enough of that. Let's go into some macro headlines. So China is in huge trouble. I was the first analyst in Bitcoin to call the collapse of the Chinese economy. I was saying it for a long time. People were poo-pooing it. I debunked the Thucydides trap, just total complete garbage by a pseudo economist, Graham Allison, pushed by the upper echelons in think tanks and universities that were, I believe, completely corrupted by Chinese influence, because China's economy never had a chance to surpass the United States. But anyway, there's no such thing as a Thucydides trap. And I was talking about this for a long time, and the situation keeps worsening. Now everyone's kind of talking about this. Any dream of China outcompeting the U.S. over the next decade has been thoroughly quashed by this point. Foreign companies and investors are withdrawing their funds from China at an accelerating pace, signaling the end of the country's manufacturing pyramid scheme. So you can see this was out this morning on Twitter. I saw foreigners pulling out funds from China at an accelerating pace, 15 billion in the second quarter, and that's going to continue. China's model is built off of a global credit bubble and globalization, and that's going away. So their entire economic model is going away. And when you tell a communist that you have to change, that you can't just do what you want, that you're not in charge of this dialectic anymore, buddy, because the brick wall's coming for you. When you start talking like that, what are they going to do? They're going to double down. They're going to crack down. That's why China has they have the choice to become Japan and have 30 years of flat sluggishness. I mean, that would be the best case scenario, honestly, because their demographics are so horrible already. China's, I'm speaking about. The other option is North Korea. And at this rate, they're going more and more like North Korea. So anyway, market participants are starting to panic and shift into government debt because they can't get out. They can't get out of these. They can't get their capital out. If they could, they would be buying U.S. treasuries, right? But what they're doing is they're buying Chinese government bonds. Upon seeing this chart this morning, my immediate reaction was, why aren't people talking about this in relation to the Japanese carry trade? Japanese banks are heavily invested in China, and the narrative is relatively high government bonds in China. Sorry, let me read that again. The narrative of relatively high government bond yields in China was almost as universally accepted as low rates in Japan. So yeah, China had these really high government bond yields. This 30, it's more significant if you look at the 10-year, but you can see we're talking like 4%, 4.5%, when the U.S. was down at like 3.5. China was always had a spread above U.S. interest rates. And then you look at Japan's, which were at zero, basically. And so the carry trade is heavy between China and Japan, not just China and the United States. And so people are kind of ignoring this, that this, as Chinese yields come down, it puts pressure on this carry trade much more than the U.S. bonds coming down, because we aren't even coming down this much. And our Fed funds range is still at 5%. They haven't cut yet. So this is where a lot of the pressure is coming from. And I'm surprised that they're not talking about this as much, if at all, really. I haven't seen this mentioned anywhere else. So that is what's going on in China. Okay. One more here, and then we'll get into, or two more here, and then we'll get into your comments. So put them down below. I am live streaming on YouTube, Rumble, Twitter, and Telegram, so you guys can comment. If you're watching on Twitter, jump over there to YouTube and Rumble and subscribe, comment over there. I'm trying to grow those channels, trying to get monetized there on YouTube, so I appreciate that. And if you want to join the community, check out t.me/Bitcoin and markets. That's our Telegram group. Okay, Iran strike becoming more likely again. Israel says Iran poised for major retaliation. U.S. deploys subs and hurries a carrier group. So this is adding a lot of uncertainty to markets right now. What's Iran going to do? What's the counter retaliation going to look like? what's going on with Hezbollah, what's going on in general with this conflict. Where does the U.S. administration lie? I mean, by putting a sub there and a carrier group there, that's actually probably giving people a little bit more of an idea what the U.S. position actually is. But this administration is so messed up. We don't know who's in charge. We don't know what the response is going to be. We don't know what the actual policy is. They can't even state a policy because their base is so fractured here. So that that's adding a lot of uncertainty to this global situation, and I think putting a little bit of pressure on all prices, stocks and Bitcoin. Okay, so Israeli intelligence seesawing assessment reflects an ongoing debate inside the Iranian government. A source with access to the intelligence told Axios, quote, the Iranian Revolutionary Guard is pushing for a more severe and broader response than Iran's April 13th attack on Israel. But the new Iranian president and his advisors believe a regional escalation now wouldn't serve Iran's interests, the source added. So back and forth. The strengthening of the U.S. force posture included the deployment of the USS Georgia guided missile submarine to the Central Command Theater, that's in Doha, Qatar, armed with up to 154 Tomahawk land attack cruise missiles. The Kings Bay, Georgia-based vessel recently completed joint training exercises in the Mediterranean with Force Recon Marines and Special Operations Forces, including units from the UK, Norway, and Italy. Austin also ordered the USS Abraham Lincoln Carrier Strike Group, already steaming to the conflict zone, laden with F-35Cs and F-18 fighters to accelerate its transit, the Pentagon said. So that's what's going on here. Again, adding some uncertainty to the market and weighing on price, especially for Bitcoin and stocks. Okay, last one, then I'll take a look at the comments. US CPI this Wednesday. Here's my preview. So big week for data. Of course, we start this with the Bitcoin Fundamentals Report, the biggest data dump for the Bitcoin ecosystem, with more data throughout the week. So let's take a look here. We have producer price index. Can I make this? Oh, that makes it smaller. Producer price index. And that is going to be tomorrow. Then we have CPI on Wednesday. I will be live streaming it, guys. So you can join here on everywhere I'm streaming right now, Twitter, YouTube, Rumble, and Telegram. I will be live streaming at 8:30 in the morning. Let's see, the estimate is for 0.3%. Consensus is 0.2%. And the previous was negative 0.1%. I have something down here. Oh, it didn't go in here. Hold on just a second. Let me fix that, and then I'll refresh this page. Just one sec. I had a different image that I was going to put in there from the Cleveland Fed. So, yeah, put it right there. Stand by. Doing this live. Update. All right, it's updated. Let's refresh. This is how we roll here on Bitcoin and markets. Everything's live. Okay, so CPI. This is what that was the expectation. Here's the Cleveland Inflation Nowcast. They have July here at 0.24%. They have, over the last several years, they have typically been high. Some of them miss it by as much as like 80%. So they're expecting a 0.46 or something, and it comes in at 0.12. I mean, very significant misses. And they're having here as 0.24. And again, back up here, the consensus for CPI month over month is 0.2. I say I'm taking the under as usual. You guys know me. I think CPI is going to continue to slow down into this recession that we're seeing. So if CPI comes in 0.1 to 0.2, there will likely be a rally in Bitcoin and the stock market because market participants will anticipate the Fed cutting in September. I think both want to rally right now. So again, both want to rally, Bitcoin and stocks, but what's holding it down is this uncertainty overhang. We have the uncertainty of the Fed. We have uncertainty of economic data. And now we have uncertainty of Iran. We have uncertainty of what's going on in the UK, uncertainty in the Ukraine war with this big invasion now of the Kursk region. So there's all sorts of uncertainty out there. Oh, and then on top of that, we have stuff like Japan blowing up. People talking about the carry trade unwinding, which I don't think it really is all that much. But, there's all this uncertainty out there. So I think that the fundamentals behind stocks and behind Bitcoin, specifically Bitcoin, are very good and they want to go higher. But it's being held down by this uncertainty overhang. However, anything under 0.1% on the CPI might be interpreted by the markets as bearish, meaning a recession is very close. So if it misses big time to the downside, people aren't going to be like, hallelujah, the Fed's going to cut. They're going to be like, oh no, the Fed has to cut. So there's a difference in tone there. There's a difference in meaning. And that's possible. I think it's more likely to have a big miss than a beat on the CPI. So we'll have to wait and see about that on Wednesday. Join me for that live stream. Next in the week, we have jobless claims and retail sales on Thursday. So that is, by the end of the week, we're going to have a lot of data, a lot of new data, a lot of new price action, and a lot better idea of what's going on, and as well as more information about what's happening with the Iranians. So this week is kind of a big week for figuring out what's going to be happening over the next, say, month or two. This week is very important. Okay. So that is all for the macro. We're going to go on to price analysis. But before I do that, let me check any comments we have here. BTCP. He says, if they release a new token, it's a shitcoin. So you're talking about Trump Jr., Eric Trump, Donald Trump Sr. I think, obviously it would be a shitcoin. A stable coin, I don't put in the same sort of shitcoin status. Depends. Okay, if it's Tether, I don't think Tether is a shitcoin. But Circle, I would say Circle is a shitcoin. And a lot of stable coins can be shitcoins, depending on how they are created. Like especially if it's an algorithmic stable coin, that's a shitcoin. And for those viewers, an algorithmic shitcoin just means that, an algorithmic stable coin just means that there is no centralized intervention to keep a peg. There's some other assets that it owns, and it buys and sells those assets in the background via smart contracts to keep that market value stable at $1. There's been many, many experiments with this throughout the last, say, 5-8 years, and they always blow up. They never last very long. They always blow up. So algorithmic stablecoins are definitely shitcoins. Now, centralized stablecoins, depending on the provider, I would say, if it's an exchange, watch out, because that exchange that stablecoin just has too much baggage on it, too much liability, too much of that stuff. Now, if you are also a stablecoin from a kind of shady character, which Jeremy Allaire and Circle, they're shady characters. They've been trying to blow up Tether for a long time. I don't think it's going to lose its peg necessarily, but I would put him and his ilk and his conspirators, I would put them in the realm of shitcoiners. Tether, no, I don't think so. And I do think that you can set up, I think the Trump family could set up a stable coin that would be not a shitcoin. But short of a stable coin, yeah, they would all be shitcoins. If you guys are watching on Twitter, jump over to YouTube or Rumble and put a comment down below. I'll answer any questions or comments that you have. I like going on tangents. Check in Telegram, and I don't see any comments there. I will come back and check that here in just a few minutes. Let's get on to price analysis. All right, price analysis. Oh, and another admin note before we get on to that. Guys, this is report number 300. So I am putting out a, promotion for the first month free when you become a member. You can become just a $5 member and get a month free, or you can join the professional tier, $15 a month. Pretty much the best priced professional macro and Bitcoin newsletter out there. You guys get that here for $15 a month and free month for the celebrating the 300th report. All right, now let's go down here to, sorry, lots of scroll doom here. Price. Bitcoin charts. Last week's conclusion was pretty spot on. So I said, this is from last week. Overall, this is a TradFi-driven panic, not Bitcoin fundamentals. Supply, and remember last week was the big dip. Supply is still being squeezed and the bull market is still on. Things to consider. 1, oversold again on the daily. 2, support on the 365-day moving average and 50-week moving average. Number 3, a death cross coming in 2 days. And number 4, the deleveraging in the futures market is complete. Taken together, it is likely the bottom is in. I'm expecting a significant bounce tomorrow. It actually happened 3 days later. And perhaps a week's worth of consolidation around 60,000 before a full recovery. But I'm watching what's going on with Iran and Israel, which could cause further delay. So this is a new chart here this week. See the 200-day, 50-day, 50-week, and 365-day, as well as the megaphone. So we bounced right here on this kind of cluster of support in an oversold position and rallied right into the death cross. And I was talking about that. The death cross is like a Schelling point. Remember, guys, TA is a lot of different Schelling points, places that attract attention, absent of communication, that, they attract bids and asks. That's where the trading action is happening on trading books and things, on the order books. So it rallied right into the death cross and has been consolidating around 60,000. You can see this morning when I snapped this screenshot, it was 60,268. But then by the time that I pulled the price later, it was down to 59,100. But anyway, consolidation around the $60,000 mark, and that's exactly what I called for last week. Okay, let's get into this week. We did indeed bounce off the support. We also closed the gap that formed on the CME futures. Gaps are created with price movements outside of trading hours. They typically get filled due to Schelling point effects. So here's that CME gap, and it was filled. Pretty simple. We can clearly see the short-term liquidity grab on the 24-hour heat map at 60,000. No clear advantage for up or down in the near term at the moment. So here you can see that it built up some liquidity right in this region, and then price found that liquidity just like that. So that's kind of how we expect price to move into this. So price is always trying to find liquidity. The market's always trying to find liquidity. And that's just how it happens. But if we zoom out now, we can still see on the 6 month, all this liquidity up at 72,000. So we came down here, grabbed this down at 50,000. I didn't think we were going to get down there, but we did. And we grabbed that liquidity. And now it's going up. And you can see there's kind of this dead zone right here between 69 and 50,000. There's not a lot of action going on there for liquidations. But this up here is glowing. It's like a moth to a flame. This is glowing, and price is going to seek that out. So price is going up here. It's just a matter of when we get there. Are we going to consolidate for another couple of weeks and then move up there? What's going to happen? We don't know, but that is the magnet for price. That is the candle that's attracting the price, the moth price. Okay, notice the immediate vicinity of price. There's little to be squeezed except the overwhelming zone of interest at the all-time high. Okay, open interest is also showing plenty of room to the upside. If open interest starts to increase, price could rally rapidly. Again, I think the price of Bitcoin wants to go up. It is simply being held down by elevated uncertainty at the moment. FTX collapse here, ETF launch here, lots of open interest, but you can see the price really tracks that open interest or vice versa. And yeah, so we've had a pop in price, but we have not had the follow through in open interest. If open interest does follow on this and starts rising, the price could rise very rapidly to 70,000. very, very rapidly. I mean, that's not a big move. Bitcoin, a 12% move or whatever it is, Bitcoin can do that in a single day. Okay. We can see this elevated uncertainty. Again, the narrative of this week is kind of elevated uncertainty in the fear and greed index. We are in extreme fear territory at 60,000. So we're still at 60,000, yet we are at extreme fear. You would think we would be down at 45,000 to get to extreme fear. No, we're right at 60,000, and people, there's a lot of uncertainty out there. There's a lot of room to turn bullish from this point, but little room to turn more bearish. Can't get much more bearish than this. I mean, yes, of course, there's this part down here, but that's rare, okay? The most likely is a move to the right here on the fear and greed into more greed away from fear. In other words, if people haven't sold yet, they likely won't be selling. So if you didn't sell this dip, if we go up here to the price, if you didn't sell this dip down here to 50,000, you're not going to be selling here at 60,000. You're not going to be selling a dip to 55. There's not a lot of sellers. They all sold. Look how much time they've had to sell. Look how much time they've been waiting to sell. And you think they're going to sell right now and they didn't sell here at 50,000? No way. No way. Where was I? So, and those who did sell will probably buy back as price begins to rise. So we're kind of in a perfect storm, ready to rise here at the moment. I've discussed market comfort levels with certain prices before. When the price initially breaks into a new higher range, people subconsciously think this is a high price, making continued gains harder to achieve. So you're not used to it. The first time that, just think, when Bitcoin gets to like 200K, whenever that is, Bitcoin gets to 200K, you're thinking in your mind, because right now you're used to like 50, 60,000, 70 is really good. But really 60,000 roughly is in your mind, in most people's minds now, they're used to that price level. But what if, when it goes above 100, when it goes to 200, subconsciously you're thinking, holy cow, it's moved so much so fast. This is a high price. I'm not used to it up here. And subconsciously, more and more gains at that point are harder to achieve, just psychologically in the mass, what would you call it? The mass brain, the hive mind of the market. Gains are harder to achieve at that point. However, after a few months of consolidation, people become accustomed to the price in the 50 to 60,000 range, or whatever range we're talking about, creating psychological space for higher prices. The 100K level is going to be a major psychological barrier. So yeah, going from 5 to 6 digits, that's going to be major. So we will likely spend a lot of time at or just below that level later this year and into next year. Overall, this week, here's the forecast. Overall, this week, it is less easy to say where prices will go in a short term, other than simply spending time at the 60,000 level. So it's easy to say we're going to go sideways here for a week, and that's kind of what I think. But it's harder to say where it's going this week than other weeks, in my opinion. All things equal, without an Iranian attack, Bitcoin leans heavily bullish at this time. The next stop higher is the all-time highs. Okay, so that's it for price. We're going to go into mining, but let me check and see if there's any other comments. BTCP just upgraded to a pro member. Awesome, man. Welcome aboard. Yeah, before I move on here, guys, this is issue number 300 of the Bitcoin Fundamentals Report. And we're celebrating the 300 reports by giving you a free month for becoming a member. That member, the normal member, the basic member, is $5 a month, and it comes with the ability to join our price forecast competition every month with a chance of winning $20 in sats. We have between, some weeks or some months it's lower, some months it's higher, but usually we don't go past 20 people for who guesses. So if you do join and you become a paid member and you do make a guess, which, I don't know why people don't, but some people tend not to guess. And you have a significant chance of winning that would be 4 months of membership recouped by that. So anyway, free month for the $5 members and also free month for the professional tier. You get professional short, medium, and long-term forecasts with that. Okay, let's go back down here. We are into mining. Well, let me check Telegram, see if anybody said anything over there. No. Okay. We are into the mining section. So Bitcoin miners' reserves are now at January 2021 levels. So Marty Party, I think that's, what is it? Marty Partymus, he posted this today. And you can see Bitcoin reserves here in purple. And they are down here at the January 2021 levels. And they're actually below that now. So miners have been selling off dramatically, especially after the halving. So I say Bitcoin miners have had to sell much of their reserves to stay afloat during this long consolidation in price since March, especially after the April halving. Those reserves are reaching historically low levels right now and imply selling from miners is likely slowing or likely to slow or come to an end soon as they run out of coins. So that's part of the supply shock coming from miners. They just run out of things to sell. Hash rate will go down because people have to go out of business. But of course, that doesn't hurt long term. A lot of these players are able to sell their business to another miner that wants to buy it, and they don't even have to shut off their machines. They just, sign on the dotted line and everything is transferred over. The hashing keeps going. So we might not see a disruption in hash rate or difficulty, but we could see some bankruptcies going on in the Bitcoin mining space. And what do you do right before that? You're going to sell all your assets and try to stay afloat. So that's what we've been seeing. All right, next Bitcoin mining headline is Bitfarms faces $27 million net loss in Q2 of 2024. And this is big because they're a public miner. According to the official press release, the company generated 614 BTC in the second quarter with an average direct production cost of $30,600. $30,600. That's in comparison to $18,400 before the halving. So it's not double. It's not double, but that's a big difference. It costs them $30,000 now to mine a Bitcoin, and it used to cost them $18,000. You see how flush with cash they were at this $18,000. Okay. Meanwhile, the total cash cost per BTC increased to $47,000 in the second quarter, compared to $28,000 in the first quarter, as a result of producing a lower quantity of BTC. However, July saw a 34% increase in Bitcoin earnings from the firm, reaching 243 BTC, valued at 14 million, an improvement from 189 BTC worth 11 million in June. Okay, so they're having problems, but they'll figure this out. The halving causes a disruption in the market, usually forcing miners to sell a little bit more Bitcoin than they otherwise would. But then we have players like Marathon that are aping in with debt to buy Bitcoin. Okay, so there's a lot of moving parts here in the mining sector. I'm just giving you some of the highlights. Okay, so hash rate and difficulty. Hash rate has pulled back from the monster rise over the last month, accompanied by a significant rise in difficulty to match. So we can see here, we had the huge difficulty adjustment, 10.5% up to an all-time high. All-time high on the hash rate. This is actually a moving average of the hash rate. So it was up to an all-time high as well. But it has pulled back slightly over the last couple of days. Price has dipped, but this has pulled back not as much as the price has dipped. So miners are still extremely bullish out there. Mempool. Miners have eaten their way through nearly all of the mempool above the very lowest fee bands, 1 to 2 sats per virtual byte. You see this pink is 1 to 2 sats per virtual byte. and pretty much all the other color bands except for these two are eaten through. So yeah, very cheap transactions right now. This does not support any sort of imminent sell-off. We talked about this last week as well, that at the time, the mempool was not signaling that there was a major sell-off coming. So it was kind of a surprise. That's how I dialed in that it was a TradFi driven thing, because it wasn't a Bitcoin driven thing. If it was a Bitcoin driven thing, we would have seen some activity more in the mempool, and we didn't see that. So it was just a sympathetic dip from Bitcoin, and it was bound to bounce, and that's exactly what it did. Okay, that's it for mining. Let's go on to layer 2, and then I'll take a look at any comments. What's up, guys? 211 people watching. So if you're watching over there on Twitter, jump over to YouTube or Rumble. Link is in my pinned tweet. And like, comment, subscribe over there. Appreciate that. Trying to grow the channel to get it monetized. Put your comments down below. It can be any sort of tangent. I don't mind. We will just go with the flow. Check out the Telegram at t.me/Bitcoin and markets. Okay. Bitcoin layer 2. And miscellaneous. I put stuff in here like runes, transactions, inscriptions, and things like that, but there hasn't been anything to report on. Anyway, Bitcoin layer 2, BitLayer, reaches $300 million valuation with new funding from Franklin Templeton and others. And you can see this is reported from the block. And I link all the bullet points. So you guys can always find these articles by going into bullet points. Okay, reading from the article, Franklin Templeton Digital Assets and ABCDE, a crypto venture capital firm co-founded by Huboy co-founder Du Jun, co-led the round, BitLayer Labs said Tuesday. Other investors included Framework Ventures, WagMe Ventures, GSR Ventures, Flow Traders, and Falcon X. Angel investors including Domo, creator of BRC20, and Brian Kang, co-founder of FactBlock KBW, also joined the round. Founded last October, BitLayer Labs is building a Bitcoin Layer 2 network based on the Bitcoin virtual machine, which offers Bitcoin equivalent security. BitLayer launched its mainnet V1 version 1 in April and claims to have an ecosystem of over 200 projects already. Wow. Wow, guys. How many times did we hear this with shitcoiners? Oh, we launched Solana. We launched Solana Cash. And look, it's doing better than Solana. It's doing better than Cardano. It's, whatever all the other ones were that were supposed to be ecosystems. And they started all these tokens, and it was just a bunch of fake stuff. The founders probably were just pumping out a bunch of crap. How do we know BitLayer is not also doing that? They probably employ somebody to just make up silly projects all day long and launch them. Probably. But anyway, BitLayer, they launched their mainnet. At least it's layer 2. If you have tokens, see, the problem with shitcoins and why we call them shitcoins is because there's other tokens. Layer 2s are supposed to be using Bitcoin as the monetary unit. So for example, you have Lightning. What does Lightning use? It uses Bitcoin. You have Liquid, which is a sidechain. And what does it use? Well, you can create other tokens on on Liquid, but the primary unit is Liquid Bitcoin, cryptographically pegged Bitcoin. So it's using the monetary unit of layer 1 on layer 2. That's why it's different than a shitcoin project, which doesn't have anything to do with a layer 1. They are a layer 1, and they are just printing tokens. They're token printing scams. Okay, and so if you get this type of thing going, BitLayer, and they're printing a bunch of tokens on layer 2, somehow anchoring it to the Bitcoin blockchain or whatever, then it's most likely a scam. Most likely. Anyway, it is currently ranked the #1 Bitcoin scaling project in terms of value, locked up at over $550 million. Okay, so what is that? Is that Bitcoin? Is it locked up Bitcoin, or is it locked up in 200 different token projects? I don't know. I don't have time to look into this. If you guys want to look into it and ping me with some article or something, I'd be happy to take a look at it. But, most likely this is just a bunch of shit coins and they're valuing them at $500 million. I'm not sure what the dollar value is for Lightning Network. Let me see. If you go to 1ml.com, you can take a look here. So 505, that's what I reported above for the number of Bitcoin in the Lightning Network, publicly at least. So that's around 300 million. So it's a little bit more than this bit layer, is a little bit more than that. But is this all Bitcoin, or is this the 200 projects worth of shitcoins? I'm guessing it is the latter. Okay, so that's it for layer 2. Down below at the end here, you have, in case you missed it, with all the stuff I put out over the last week. Lots of good reading for you guys. And there's ways to support the show. Forward it on. If you were forwarded this, you can always subscribe there. Yada, yada, yada. Okay, let's take a look at the comments, if there's any more. No comments, man. 215 people watching and nobody's making comments. Come on now. Let me check out Telegram. Okay, guys in Telegram, I can't see it if I'm just watching the actual live stream post that I put in there. But let me see. I might have missed something here. Okay. Nothing. Okay. Sorry, I'm just catching up on the chat. I see Uncle Swan. Yeah, thanks, man. Happy 300. 300 issues of the Bitcoin Fundamentals Report. Again, you guys can join first month for free for just a basic member. That gets you the ability to join the price forecast competition every month, win $20 in sats. It also gets you a clickable version of my Bitcoin infographic. And let's go to that real quick. Prehistory. So this is probably one of the things I'm known for best. This prehistory. So while back, I did a regular timeline of it, and everybody was tweeting about it. And then, what is his name? Dan Held put it in his book or something. And he misspelled my name, by the way, but he did give me attribution. And he did ask for my permission. A lot of people were saying that he took it without permission and all this stuff. No, but he asked me and I said, go ahead. But anyway, I remade it, and this is the clickable version. It does have, you can click on every single different thing and read about the history of all these different things going on. All the way back from TCP/IP, or Unix actually, then to TCP/IP, public key cryptography, economic ideas like Frederick Hayek and the denationalization of money. Merkle Trees started having more economic stuff here by Murray Rothbard. And let's see, impossibility of distributed consensus with one faulty process. So there's all sorts of academic stuff happening as well. The Crypto Anarchist Manifesto by Timothy May. DigiCash, founded in '89. Anyway, you can go through all of these different things and click on it and read what's going on with this and get a little bit of a background. Even into the 2000s, we have video game currencies. So we have EverQuest, IGE, Market for Trading Virtual Goods, Second Life, Linden Dollars, and my last name is Lindner, so that's pretty close. World of Warcraft released WoW Gold in 2004. And you can see all of this is just building. 2004 was also reusable proof of work and the Ricardian contract. Then we get into ethics of money production, and boom, the Satoshi Nakamoto launches Bitcoin. So this is a big build up here. And if you want the clickable version, you have to be a $5 member over there at bitcoinandmarkets.com. And since this is the 300th report, you get your first month free. Professional tier, I put out a bunch of stuff. Let's see, premium. I was going to do a macro thing, but I did not get around to it this weekend, a macro post. So this is the latest premium post. You guys can go down here, see medium term, long term forecast, short term forecast with charts, everything, talking about it. More detail. My short term forecast, Market Pro. So there you go. That's what you get for the premium stuff. But anyway, one more chance for comments, and then I'm going to wrap it for the day, guys. Let's see if there's any other comments. Not seeing any. 228 people watching. Welcome. Live streaming on YouTube, Rumble, Twitter, and Telegram. All right, I'm not seeing any more comments, guys. So appreciate you hanging out with me for this Monday. Hope you had a good start to your week. And I'll see you guys on Wednesday, 8:30 a.m. for the CPI drop. See ya. Peace.